Hello, everybody. Welcome back to a YouTube video. I'm Kes from Kes Investing. And today we're going to be going over our Bank of America trade and our SPY trade, since you guys wanted to know a little bit more about my thought process as to why I took those trades. Before I start, I just want to say thank you to everyone for the recent support, the likes, follows, etc. Without you guys, I would not be able to do what I do. So I'm very thankful for you guys and appreciative as always. Anyway, so let's dive right in. As you see right here, I have the Bank of America chart, the 5-minute chart opened up, and we played a $46 call on this one. And one of the big things that a lot of people starting off with technical analysis are having a tough time with is, overcomplicating their charts. If you look at my chart, I have two things on there, the candles and the volume, and that's really all you need to make trades, on a day-to-day basis. So what I was looking at was we opened the week up, January 24th. We opened the week up at around this $44 area. Dip down, that Monday where we had that reversal back up. So this 44 area was a huge level in my head, leading into Tuesday the 25th. Also, banks in general were a pretty important sector that I wanted to keep an eye on because of FOMC this week and their rate changes and rates affect banks. So this was a sector that I wanted to keep a close eye on. On Tuesday, we had the perfect dip by opportunity pretty much. When we entered the 46 calls, we waited the morning pump and waited for the dip entry. So what I was looking for with the dip entry was, if you go back to this 44 level, let's see if we can mark this 44 level. We have resistance at the open on the 24th. Then we come back up for resistance on the 24th again. And then we break through when we had that, that face rip of a rally on Monday. Now, what I was looking for was the retest of that resistance to become new support. Because, old support becomes new resistance, and new resistance is old support, essentially. So what I was looking for was that back test towards this 44 area, which we ended up getting, and that's when I entered the 46 calls. Right around this area where we started to come back down after testing above and coming back, and making sure that this 44 level is legit by using it as support. So that's how I was sort of targeting and what I was looking for. And as soon as we got in, we saw a little bit of a dip, but not much, and then it absolutely took off, and it was an incredible trade. Saw this flag kind of happening during the 25th intraday, and that continuation higher and higher and higher, and ended up going in the money and then some on the 26th, and the peak of it being 46.75 on the 27th. So we got in at $44 for a 46 call and rode it up all the way to, almost $47, just based off of one line on the chart. And that was the old resistance becoming a new support. So, like I said earlier, you don't have to overcomplicate these kind of things. If you want to study technical analysis and price action, all you need are candles, volume, and horizontal lines, basically. Everything else you can just visualize. Like with the flag that I just drew, you can visualize seeing that flag there. So that is an important thing to note as we go further into this video, especially with the SPY trade. So let's head over to SPY now on the 5-minute. So we played this one off of basically what we were looking for was the same thing that we were looking for Bank of America, but for the downside. So immediately on the 27th, you see this area right here. Let me see if I can get a better tool to kind of illustrate. Right here, this area. Support. We held this support, and then we had a huge breakdown on the 27th, going from 437 to 430 all the way down to 427 basically on the 28th. So what I was looking for on Friday, which would have been the 28th, was we saw this rejection at the old support. So old support becoming new resistance. We noted this rejection, and we wanted to see another rejection. So right around this area, around where we start to see this test back into the 437 range, that is where I decided to take the 432 puts. Only because we knew that this 437 area was super, super pivotal and an important area for bears to defend and bulls to try to get over. So we saw these tall wicks leading up into this 37 area, tall wick here, tall wick here, tall wick here, and then we saw this fake out of, bulls thinking that they could get it over this 37 area, but not being able to, and the drop all the way down to, our 432 puts actually going in the money from 437. So those returned, very nicely. I think it was about 300% return in the end, and the Bank of America was 400% return in the end. But just using this simple strategy to kind of evaluate and look over stocks, of just finding supports and resistances. You could use it on bigger time frames. I like to use them on the daily time frames to help find these larger pivotal areas, and you could use them on smaller time frames, as you've seen with these two examples, on the 5 minute, where you know day traders are kind of respecting these levels a little more carefully compared to the larger time frames, where swing traders are using these levels as pivots. Um, so yeah, we took it, at this 37 area, and it dropped all the way down to 31.84, basically 431.84. Yeah, and later you see the Bulls reclaim it, and look what happens when they reclaim it, 437 all the way up to almost 442. So, keeping an eye on these kind of things and focusing in on, where supports are and where resistances are intraday can help benefit you a lot in, not only just making plays, but overall market direction. You see, like go back to the 27th here, where we see this, support, this morning support kind of break down on, this larger than normal volume. Like, just look at the volume all throughout here, and then as soon as we break down, we see this big red volume. So using that kind of strategy can help, switch gears, from a bullish perspective to a more bearish perspective, as you see, this support start to be breaking down with large bearish volume. And it'll prevent you from going long and getting burnt as we start to see this pullback. Um, and here, if you're still bearish, at the 437 mark, as soon as you see the 437 break and we see the increase in, look at the volume, notice the volume here, right? So look at my cursor. We have volume all around, all around, all around here at this area. And as soon as we see above this 437 mark, we see the little bit, that larger volume node, and then the smaller bearish pullback, and then a continuation with large volume. So that's, to read the volume, support and resistance, and price action is basically the essentials to, um, building your technical analysis foundation and going from there. All the patterns and flags and, wedges and stuff like that, they'll all come with time. But what you need to focus on, especially as a beginner, if you're just starting off with technical analysis, is focusing on where buyers are stepping in and where sellers are stepping in, and what levels each of them are respecting, because that's just a really simple way for you to start to read price action and to be able to use that price action to your benefit once you start to, advance more further and further in your technical analysis. Yeah, so that's pretty much all. It was a pretty good week overall for us. Make sure, if you enjoyed this video, to leave a like, subscribe, share with your friends who are starting to look into technical analysis and need a quick, pointer or two on how to start off. Tomorrow, Sunday, my newsletter comes out, so if you'd like to subscribe to that, I go, a little more in depth on, the plays that I took this week and strategies and what I'm looking forward towards next week. Other than that, thanks for supporting, thanks for watching, and I hope you guys have an amazing weekend.